Hi, welcome to the Market Alert for Tuesday, the 1st of March 2022. So crypto jumps, stocks dump and pump as cracks appear in global financial plumbing. Let's hope it doesn't move into the banking system. As February comes to an end, 2020 has seen the US Treasury market suffer the third worst start to a year ever. Yeah, we're certainly starting to get interesting. But as I said yesterday, they're going to keep the illusion alive that everything is fine and it's all under control. Despite headlines like this, Russian bank run has already started. I noticed Germany as well that have an interest in some banks there. Also saw runs yesterday with Germans taking their money out or trying to. Russia key interest rate hike to 20% after ruble slumps. This went from 9.5% to 20%, up 11.5% in one day. And the price of petrol continues to go. Now we've gone to 150 pence per litre for petrol. And I think diesel's around 160 in places that I've seen. So, yeah, it's all of this inflation in the background as well. You just can't make it up anymore, can you? Today we've got ISM Manufacturing. This is out at 3 p.m. And we've also got Saunders speaking at 6:30. The gold-silver ratio is sideways at the moment. A bizarre thing going on in silver and metals at the moment. It's just, I don't know, it's unprecedented, I suppose, given the backdrop. But we'll look at that in just a moment. So, not doing a lot, hovering around the 78. So let's get into the markets and have a look at the Dow for yesterday. You can see that we've had 3 days now of buying. We were oversold, as I did mention in Friday's or Thursday's market alert when we saw this fight back. Still the highest volume in the Dow for some time there, making its way back to 62% and moving up again. Overnight, they're just trying to do whatever they can to hold this market and keep it coming back to the highs, despite the fact that there is a full-on war and hyperinflation being created. It's just incredible. Absolutely incredible. But then again, like I say, nothing should be of a surprise really, but you can't help thinking, what happened to free markets that, allowed to find fair value that were manipulated? But we just have to trade what we see. I mean, it's predictable. We wouldn't have that predictability aspect if there was fair value, because we go to more of, I wouldn't say random, but the patterns wouldn't be as predictable as they are at the moment. Let's just keep ramping the market up. It's just crazy. And yesterday, of course, they used the excuse that they were meeting at the border to discuss peace talks. I mean, what? A chat over the fence? And you expect us to buy this crap? The next minute, they're bringing out headlines that civilians are dying and apartment blocks are being bombed. I mean, make your mind up. It's one or the other. But it's amazing how they lob these media grenades out that give them the excuse to then move the market to the upside. And that's precisely what we're seeing here. I mean, we're just about to take out yesterday's high now in the overnight market. So we'll be through the 62 and we'll be marching onwards and upwards until we get back to the all-time high then, will we? Despite the fact there's now even a nuclear threat. It's just incredible, isn't it? Let's have a look at the DAX. So in the DAX, it's even more interesting because yesterday we have the biggest volume bar that we've seen for a long time. We have demand overbought and now making our way back to the upside as well, which we can see already through the 38, the 50. We need to get through the 68, 78 and the 89 there. 78 has the high of Friday to get through there as well. That's anything to keep in mind there. In the 30-minute German DAX, yesterday in the pre-market, we spoke about yesterday's low. That low held. The market moved up all day long. Every short trade was nigh on impossible to actually get a decent profit unless you were in a 1 minute or a 5 minute, and then it was debatable in the 5 minute. 582 points to the upside yesterday in the German DAX there. Bit of a dip down overnight. It's the only one that has been allowed to move to the downside. So we had a pullback overnight. Where did it pull back to? We can see that we're oversold. We came back to 78%. There's your oversold. overnight market kicks in, we buy back in, we got demand, we got the crossover, and we move to the upside. And again, now we can see here that on the short side, we've got the 200 MA causing a problem, but the market hasn't dropped significantly. It dropped about 20 or 30 points before it found support at yesterday's close. And once it found support there, it's now moving to the upside as well. We've got the high of yesterday in the crosshairs as well at the moment. On the overnight, the market's moving to the upside. Here's yesterday's action in the 5-minute chart. The market moved up from the start. If we have a look, go back to the daily, you will see that 78% was the low in yesterday's move. You can see this, all of the action down here. This is the futures market kicking off, moved up. We had a bit of a pullback during the morning, and then once it found its feet, the market continued to move to the upside. So here we had a bit of a move to the downside with the shorts. There was a 50 points move there, and then on the upside we don't get anything here. We just get a reversal. It's not oversold. So we get the market moving up, then we get a resumption to the downside. We are now oversold with crosshairs and whatever, but we just don't move above. We get a continuation pattern here because the market closes back below the 20 and the 5, and then we get the shakeout that we need. And once we've got the shakeout, then we're sorted, aren't we? And if we come back to the morning start from this low to the morning high, you will see, if I just remove this and just do that again for you, from here to here, you will see that we end up in the 78% retracement area. Huge volume, divergence, and oversold with a crossover. And then the market makes its way back up, grinds up slowly. It was an interesting one, actually, because again, you've got this situation where it's overbought. You've got the 200 MA, the market goes down 50 points between the two lines, but doesn't give you 50 points on the trade. And then we get an up and down because we came back down to the lower part there, just oversold, and we end up with an 89% retracement in there with demand. And then the market reverses and has a last shunt to the upside. They soon sold back into this, and then prices dropped down 100 points, and then from there it was all the way up, despite a couple of attempts to try and short the market. As I said yesterday, they're going to do whatever they can to keep this illusion alive and move the markets up. And I dread to think, if there was a ceasefire and Putin withdrew from the Ukraine, the chart would look like this. It's just crazy. It's crazy, isn't it? All overvalued, but it's just the way that it is. A quick look at the currencies. JPY for yesterday in the daily chart, sideways, still finding support 89. We had a bit of a retracement back to another 89% yesterday. It's all down to the dollar, really, isn't it? But in the 30-minute chart for this yesterday, the market moving up, oversold, divergence, and there's the divergence there. And the market, let me just draw this in for you. The divergence is here. Prices move higher when the divergence starts to drop off there, and then the market goes short, and then we become oversold again. Crossover, market finds support at BRN, switches, and then moves up until it's oversold and has moved lower again, but at the moment is attempting to come back because it's now oversold in the 30-minute there. In the pound, not a lot going on. Sideways, as you can see in the daily chart there, and in the 30-minute chart, sideways. We were oversold yesterday morning. The market came up. We came overbought, found support with a retracement there back to 78 at the low, and then the market making its way back up, so not shorting to the downside much at all. Just trading sideways. And this is an observation: if the market trades sideways for two red bars when it's pulling back, it's unlikely to then trade to the downside. It's, if it can't breach the previous low, or if it's just marginally below, same as you see here, just the one bar Got a couple of bars there as well, but this one went slightly lower. Just one bar. Managed to move down there to oversold, and then moved up actually, which is an interesting picture there actually. There's something that's just come to mind. Anyway, let's move on and have a look at the metals markets and crude oil. Start off with silver. It's gone past its last trading day for yesterday. Market managing to hold above the 200 MA. Let's hope this continues. It's starting to move a bit on the upside there. Let's have a look in the 30-minute. Not a great deal. It's down at the DP level at the moment. In the 30-minute, needs to break to the upside if it's going to continue. Gold sideways to higher as well. This should be through $2,000 an ounce without a shadow of a doubt. But, you know, I don't need to keep raking over old coals. You know what's going on there. And the dollar also, look at that yesterday, straight down. And silver could barely move up, or gold. Crazy. And crude oil is at $99 per barrel. Now we've rolled over to the May contract. That's what the K stands for here, from those of you that traded futures in the day. So there is a difference here. We've got an inverted market. The nearby cash is greater than the futures, which is generally not the case because you've always got storage and insurance. So we're actually seeing what's known as a contango market, or an inverted market, depending which side of the pond you're on. So there we go. That's a quick roundup of events. Let's see what happens today. I don't think there's anything else to report. So with that, as ever, thanks for watching. See you in the